What is going on, YouTube Nation? This is Dark Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Got a nice workout in. And by the way, I have a real estate investment trust that's making a comeback. It's on my radar. I'm not buying it. I'm not giving financial advice, of course. It's a high yield real estate investment trust, and it's a cheap dividend stock. So if you're new to this YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. I do a lot of reviews. I do a lot of dividend investing and passive income strategies. So I highly encourage you to hit the notification bell after you subscribe. Smash that like button. Let's check this readout right now. This is a really interesting real estate investment trust sitting at $19.18. During the pandemic, these guys took a huge hit, and I'll go over that. So their average volume is 4.79 million. KIM is a symbol. Market cap is 11.89 billion US dollars. Year range is 1734 to 2657. Its day range is 1890 to 1923, and its previous close was 1903. Let's check these guys out. Here's a few things. They're publicly traded on the New York Stock Exchange since 1991 and included in the S&P 500 index. The company has specialized in shopping center ownership, management, acquisitions, and value-enhancing redevelopment activities for more than 60 years. PIMCO is committed to leadership in environmental, social, governance issues and is recognized industry leader in these areas. So they are a real estate investment trust headquartered in Jericho, New York, that is North America's largest publicly traded owner and operator of open-air grocery-anchored shopping centers and a growing portfolio of mixed-use assets. So they have 532 properties. Let's look at these guys a little bit more. Geographically, just looking at them, I mean, they're in Puerto Rico and in the United States. They're pretty well diversified. I'm just going to click on one for an example. So right here, just looking at some of their stores. So here's just for an example, Cranberry Commons. So that's an open-air power center located in Pittsburgh, PA. Center features anchors including TJ Maxx, PetSmart, Organic Grocer, Fresh Time Market. Center is shadowed and anchored with Target, Kohl's, and Lowe's. Additional smaller retailers, restaurants, and service tenants complete the property. So that's just one. I'll just go over another one just to show you what you're getting yourself into if you look at these guys. So here's one, like the fountains at Arbor Lakes. This is in Minnesota, in Maple Grove, Minnesota. So the fountains at Arbor Lakes is a 510,985 square foot center with impressive mixed anchor tenants coupled with local tenants to well serve the surrounding communities. So they got a Dick's, it looks like Home Goods, recreational equipment, the fountains, that's pretty big. So they have a lot of centers, and it appears to have a lot of companies that are in pretty good shape. Whether a pandemic or recession happens, it appears that they look like they're okay. And let's see, what else do we got? They got Office Max, Lowe's, Home Goods, Dollar Tree. It looks like they're doing pretty good. I mean, that's just an example of what they bring to the table. That's pretty nice. So let's go over a few more things. So here's on Seeking Alpha. This is a recent article on February 9th, 2023 by Deepa Saryeva. Hopefully I got that correct. Kimco Realty, their Q4 FFO of 38 cents misses by 1 cent. Revenue of $439.83 million. I'm going to go over their revenue trends. Achieved the highest year-over-year occupancy rate increase in the past 15 years. Leased 2.5 million square feet in the fourth quarter and 11.6 million square feet in 2022. 2023 outlook: net income available to common shareholders per share, 93 cents to 97 cents, FFO 153 to 157 versus consensus of 159. Now let me show you the revenue trends and how these guys took a beating. So here's their revenue. This is annually. 2016, 1,070. 2017, 1,200. 2018, 1,164. 2019, 1,158. 2020, 1,057. 2021, 1,364, 2022, 1,727. So they are starting to make a comeback. Their trends are a little bit down from 2016 to 2019. 2020 to 2022, of course, a pandemic hit in 2020, but 2021 and 2022, their revenue has increased as compared to 2016 and 2017 and 2018 and 2019 and 2020. So there is an increase in revenue, which is positive for these guys. I'm going to go over the dividend history. I'm going to start in 2010. It was 16 cents, 2011, 18 cents, 2012, 19 cents, 2013, 21 cents, 2014, 23 cents, 2015, 24 cents, 2016, 26 cents, 2015 it was 24 cents, excuse me. 2017 it was 27 cents, 2018 it was 28 cents. It was a little stagnant there. Then you see 2020, you can blame the pandemic. It looks like they had a dividend cut. And then 2020, they went to 16 cents, to 17 cents, to 19 cents, to 23 cents. They have a payout ratio of 58%. The number of dividend increases in the last 5 years is 6. Dividend growth in 5 years, negative 8.67%. You can blame the pandemic. You bought one share, you made 92 cents with a 4.80% dividend yield. Now, I'm not buying this stock. I just wanted to point this out, that this real estate investment trust is starting to make a comeback. I am really going to keep an eye in it. Now, is this something I'm going to buy right now? No. But this is a high yield, cheap dividend stock. And they're making a comeback. I like their diversification. It is very attractive. There's a lot of opportunity for more acquisitions. When I did a Google search, it was like 400. And then I go on their website and they got about 500. So there's a lot of potential with these guys. I see them expanding. Now, again, I'm going to repeat this again. It's not financial advice, but there's some dividend growth potential with these guys. And a lot of these facilities, of course, the pandemic was something extremely crazy and rare for things like that to happen. I don't see anything like that happening ever again, unless if there's something that happens and, I'm not going to get into politics, but something like really crazy would have to happen. And just with their grocery chains and everything, and chains of companies that have a pretty good occupancy rate, these guys are pretty strong. So this is one to just keep an eye on. I wanted to post a video on this one. Let me know what you think of this real estate investment trust. And a lot of you guys like high yield REITs. Hasn't done well against the S&P, but there's pretty decent dividend growth in the comeback. So let me know what you think in the comment section. You guys take care and have a great Saturday.